Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're going to be doing some longer-term technical analysis on this long-term descending triangle pattern that Bitcoin has found itself in for the vast majority of the year of 2018. And guys, I want to make one thing very, very clear here at the outset of the video. This is by no stretch of the imagination an insignificant pattern. In fact, I would go so far as to say this is one of, if not the most important technical patterns in all of Bitcoin technical analysis at the moment, and depending on how Bitcoin breaks this long-term descending triangle pattern, well, that break is going to have massive ramifications. It's going to have massive implications on the future of the Bitcoin market, and I do believe that if we break a bullish out of it, we're very likely going to be entering a new bull run. If we break a bearish out of it, best case scenario, we'll be entering a new accumulation phase, but no matter what happens, the breaking of this long-term descending triangle pattern, which will be happening within 1 month as this downtrend crosses this level of support in the first week of November, something big is going to happen, and in today's video, we're going to be discussing which direction I think we're going to be breaking out of this long-term descending triangle pattern. So without much further ado, let's go ahead and get right into it. At the time of recording this video, Bitcoin is trading around $6,316. We'll do a little bit of short-term TA here at the beginning of the video and then get into the main topic. Bitcoin did go and jump off the cliff right over here, and we saw it come down to this longer-term uptrend of support. Let's go to the 4-hour chart. We saw it come out to this longer-term uptrend of support that signifies Bitcoin setting higher lows, which is a very, very important uptrend, although I have talked about in previous videos how I think it's a little more likely that we'll probably end up breaking that, especially considering we haven't had a major significant bounce. We've seen the bears be very, very strong here in this red candlestick, and the bulls haven't really had anything to counter that, so I'm not totally convinced that we're going to hold that, but for the time being anyway, we are still trading above it, and I would very much love for us not to break that, because that would mean that we haven't actually broken the trend of setting consecutive higher lows, which is a very important thing to have going for you when you're trying to put in motion a new bull market. We would like to see that continue, and we would like to see Bitcoin never visit $6,000 ever again. But with that in mind, in this video, we're going to be running under the assumption that it is going to be breaking below $6,000 or breaking down to $6,000. And in reality, what we're talking about here, it doesn't actually matter all that much because we're talking about the long-term TA for Bitcoin. With that out of the way, let's do a little bit of the crypto market recap. Not a whole lot to talk about here, but there were some things I wanted to touch on. Bitcoin's daily volume has gone and decided to decline again. We've seen Bitcoin's daily volume jump up to close to $5 billion a couple days ago. If we come in here to the daily chart and bring our volume candles up, well, see, we got a lot of volume that one day that we fell off, and then the volume went back down to zero, basically. We didn't see any more volume after that, but that's mainly because Bitcoin is trading sideways again. Like I said in a couple of previous videos, Bitcoin has basically turned into a stable coin here over the last month or so, with a couple of little, like, Bart Simpson moons and crashes like the one we saw just a couple days ago. But Bitcoin, like I said, hasn't really traded all that much over the last 24 hours. We can see on the 7-day price graphs, we basically just traded sideways with a little cliff here of price action. But other than that, Ethereum's actually doing pretty well. It's jumped all the way back up to $200 and is currently trying to get above $200. I would very much like to see Ethereum get above $200. In a previous video, I talked about how I was expecting that since Bitcoin would be breaking that long-term uptrend, that Ethereum would probably do the same and be pulling back down to around $170. We'll see how that plays out. I do still think that's more than likely what's going to happen, but it may take a couple of days for that to be set into motion. Anyway, Ethereum's up around 1.34% over the last 24 hours, and XRP is also doing kind of well, up here around 42 cents, still below that level of support at 45 cents that it broke the other day. If we sort by change over the last 24 hours, we see Digitex futures is up by over 56%. Definitely a moonshot going on there. Be careful of jumping on altcoins like that, because when they're going on a moonshot and when they're already up 56% in the day, sure, if you jump on them, you could go and somehow make another 100%. It's definitely possible, but it's also possible that you'll buy at the exact peak and lose half of your investment. So be careful jumping in on cryptos like that. If you really know what you're doing, though, there is a lot of money to be made on cryptos that are pumping like that. But as we look over here at the rest of the altcoin markets, we do see that they're pretty much split. We see a little bit more green than we do red. Noah coin still being one of the most volatile cryptocurrencies, down by 26%. A lot of people ask me, Jeff, how do you look for cryptocurrencies that you want to trade? Well, one of the most important things that I look for are, one, fundamentals for the long term, because one thing I like to do is if I'm trading something and a trade goes poorly, what I sometimes do is I roll over that bad trade into the investing portfolio, and I'll hold on to it for the long term so that I can actually end up in the long term not taking a loss on that. But also one thing I look for is high volatility, and Noah coin is definitely looking like one of those cryptos with a lot of volatility. Think about it. If a cryptocurrency is moving up and down 10% on the day, or it's moving up and down 1% on the day, which one of those do you stand to make more money with? I'll let you ponder that. Anyway, with all of that out of the way, I think that's everything we want to cover on CoinMarketCap. Like I said, not a whole lot to get to there today. So let's go ahead and get on to the main point of today's video, that being the long-term descending triangle pattern. Now, like I said in the intro to this video, the outro has not happened yet. In the intro to today's video, this is one of the most important technical analysis patterns in all of Bitcoin technical analysis, and I do mean that. I didn't just say that for clickbait. I do mean that. This is one of the most important, if not the most important, technical patterns in all of Bitcoin technical analysis, and it comes to a head right over here on November the 7th, November the 8th, right around Election Day in America. So when you're out there probably re-electing your senators, and we're going to be seeing which direction Bitcoin's breaking out of this. But let me go over just a couple of, just some short scenarios of what happens if we break bullish or break bearish. If we break bullish out of this, what I'm expecting Bitcoin is going to do. If we break bullish out of this, I was hoping anyway that it was going to happen over here. It did not. If we do end up coming down here and breaking bullish, or just coming down here and breaking bullish above this long-term descending triangle pattern, no matter how we break it, I expect that we'll be trading up near $7,400 again very, very quickly. I think this level of $7,400 is our most likely level of resistance that we're going to be seeing a lot of trading around if Bitcoin breaks bullish, and I do think that we'll be getting above it. And one of the reasons I do think we'll be getting above it is because to get up to that level, that requires us to get through the 200 simple daily moving average. And that's a very important moving average, guys. Breaking this downtrend and breaking above the 200 daily simple moving average, that's enough to kick off a bull market, in my opinion, and also a short squeeze. One thing I wanted to mention in today's video is that over the last couple of months, shorts have been up here in unprecedented territory. Not really. I mean, we'd seen shorts come up here for a couple of days, but most of the time, we have never seen shorts this high, up above 30,000 on Bitfinex. We've never really seen shorts this high. We haven't seen this many shorts in the market, and I don't think that's going to sustain. I think we're going to probably see something like this if we break bullish above this long-term descending triangle pattern, and if we do break above this long-term descending triangle pattern, that's a really good case for a short squeeze, actually, because I imagine a lot of the stops on those shorts are right up here somewhere, just above this long-term descending triangle pattern. I could very easily see a massive short squeeze bringing us above this 200 daily simple moving average and kicking off a bull market within 48 hours of us breaking that long-term descending triangle pattern. Now, of course, it wouldn't necessarily be a confirmed bull market yet. We would want to see Bitcoin get above $7,400, then set another higher low, then eventually another higher high, then another higher low, and then we're really getting into the good stuff. But I do think that's probably what's most likely going to happen. I'll go ahead and put my cards on the table at the beginning of the video. I think we're probably going to see Bitcoin break this long-term descending triangle pattern and see something like that play out. But let's also go over what happens if we break below $6,000, the base of our long-term descending triangle pattern here. Well, I've not been shy in saying what I believe is going to happen if that happens. I've talked about in many videos, and I've said several times to people who have asked me what I think is going to happen if we break below $6,000, and I've made videos about this as well. What I think happens if we confirm a breakout below $6,000, I'm not talking about a break below here, like where we went down to $5,750, or right over here where we went down to $5,860. I'm talking about if we confirm a bearish breakout with a lot of volume, I expect that within 24 to 48 hours, Bitcoin will be trading at or below $5,000. I don't see another viable level of support below $6,000, bar $5,000. And the reason I don't see one is because, guys, $6,000 is the most important level of support in all of Bitcoin technical analysis, bar none. There is no more important level of support in Bitcoin technical analysis, and there hasn't been for nearly 10 months now. There is none. Period. There's nothing really that can stop us, because when we go below that, if we go below that, like I said, I don't think that's most likely, but if we go below $6,000, sure, there's going to be a lot of bulls down there sitting on the sidelines. But when markets break important levels of support and resistance, oftentimes they break them in spectacular ways, which is one of the reasons why I went ahead and redrew this downtrend, because if we actually had broken this, I would have expected a lot more price action coming out of here. If we break below $6,000, I don't see anything that can stop us going to $5,000, and I also imagine that a lot of the people buying in and trying to save the market and trying to get their cheap Bitcoin will probably have buy orders somewhere around $5,000. I think $5,000 would be the most likely level of support in that event. So now that we have a better understanding of what happens if we break above this long-term descending triangle pattern and whether we break below it, let's go over the technical analysis that leads us to believe what we're going to be talking about in today's video. Let's talk about let's get to the bottom of what we need to understand to decide which direction we're going to be breaking. Well, there's one thing that a lot of people like to bring up when I discuss this, and that is that descending triangle patterns are continuation patterns, and I'm very familiar with this. In the course, we just made a video on continuation patterns, and descending triangle patterns, or the descending triangle pattern, is one of the patterns we talked about. And one of the things that you often find with descending triangle patterns is that more often than not, they do break bearish. And one of the reasons that they do break bearish is, well, it's very simple, actually. You're setting lower highs, which means the bullish sentiment is dropping off, but you're setting the same low. And as we talked about in the support and resistance level video in the course, when you go down and you test the same level of support over and over and over and over and over again, or the same thing for a level of resistance over and over and over and over again, it's almost like that level of support or resistance has a health bar. It's got a health bar right here, and you have like 1 life, 2 life, 3 life, 4 life. You come up here and you test it, and then you just start losing lives every time you go up and test it. And every time you test it, that level of support or resistance gets a little bit weaker. And every time you do that, you have to be careful, because every time that level of support or resistance gets weaker, it's more likely that you're going to break it the next time you touch it. So what do I mean by that? Well, Bitcoin has come down to $6,000 many times. Once, twice, 3 times, 4 times, 5 times, 6 times in the near future, more than likely. That's not really a good example of something that you want to see happen to a level of support or resistance, because after around the 3rd time that you test a level of support or resistance, it's really not all that likely that you're going to continue holding it. Normally, levels of support and resistance do not hold after they've been touched 6 or 7 times. So with that in mind, and also with the fact that long-term descending triangle patterns, or descending triangle patterns in general, are normally bearish continuation patterns, that would stand to reason that we're going to break below $6,000. Now, let me explain why I don't think that's going to happen, because I don't think it's going to happen. One of the reasons I don't think it's going to happen is because the bearish sentiment at the beginning of this year was far stronger than it is now. Guys, I can tell you from experience, I'm a YouTuber. I read 100 plus comments a day. I run polls on the channel. I scroll through Twitter a lot when I'm trying to get my opinions on what the crypto community looks like. I have the Discord server where I sit in the Discord and I watch all the conversation. And I can tell you guys that probably one of the most bearish times for the Bitcoin market was right over here and right over here. These are probably some of the most bearish times. Right now, we're not really all that bearish. There's definitely a bearish sentiment, but it's not as bearish as it was back over here. And in these times, the technicals as well as the fundamentals were also, if not more bearish, they were slightly less bullish than they are now. And we still didn't break below $6,000. The fundamentals have continued to improve, guys. I've talked about this ever since the beginning of the bear market. The fundamentals have continued to improve while price action has gone down. We've seen price action go down, fundamentals improve, and this is our difference right here. And this is what I'm looking at, because this is going to get closed eventually, and we're going to come back up to that level in eventuality, and that'll happen in the next bull market. But for this bear market, the bears have gotten a lot less strong. I don't think that they're as strong as they used to be. Right here, I think we jumped off the cliff here because we broke a long uptrend of support, and that gave them confidence back. But I just don't see the bears being as strong as they used to be. I see the bulls being quite a bit stronger than they were a while ago, because we've confirmed that $6,000 is a level that will continue to hold. But like I said, typically you're not going to see it continue to hold this long. The fundamentals have continued to get better. The bears are not as strong. And also, there's a lot of things on the technicals that we want to talk about. One of them is actually on the monthly chart. I don't come out to the monthly chart all that often when I'm doing shorter-term technical analysis, but this is longer-term TA, so there's something I want to show you on the monthly chart, and that is the 20 exponential moving average, the 20 monthly exponential moving average. You guys know I'm a big fan of the 20 exponential moving average. That's why there's an entire video on it in the course. This is a very, very powerful exponential moving average that I find useful on just about every single time frame, and there's an interesting thing happening in regards to it right now. If we zoom out the chart and make this really big so we can see it, right now Bitcoin's monthly chart is sitting on support on the 20 monthly exponential moving average. And this means two things. One thing is that we have not gone below the 20 exponential moving average in a very long time. The last time we were below it was in the accumulation phase and the tail end of the bear market here in 2014 and 15. We've not gone below it since. Also, that means that this is a very strong level of support that I don't think we're going to break below. But if we do break below it, what that also means is I think that lends to my argument that we'll be going straight to $5,000 if we break $6,000, because this is an important level of support. This is a very important level of support, guys. I don't want to understate, and I also don't want to overstate, but I don't want to understate how important this is. If we go below it, that would indicate that we're probably going lower. I'm not going to sit back and say that there's no chance for Bitcoin to go below $6,000 down to $4,000 or $5,000, maybe even $3,000. I just don't think that's what's most likely. Now, there's one thing I want to point out to the contrary, which people have brought up many times, and that is the bearish cross on the MACD here. We have seen a monthly bearish cross on the MACD, but I don't think this is strong enough to overshadow everything I'm talking about in today's video, because we did see this, but we saw it in June. If we were going to see a major follow-through from this, well, where is it? We saw this bearish cross in June. I haven't really seen the follow-through from it. We've seen the market continue in the way that it has been moving ever since June. The market's just been continuing this trend of setting actually higher lows and lower highs. We haven't really seen a lot of bearish price action come from that. Now, also, you could say the same thing about the 20 exponential moving average, but I'd wager that more people are looking at the 20 EMA right now than they are looking at the MACD, partially because the 20 exponential moving average giving us support is a more recent development, while the monthly MACD cross happened several months ago. With that also in mind, there's some other things I want to talk about here. On the daily chart, like I said, when we see Bitcoin break below this downtrend, excuse me, this uptrend of support, I think we're going to come down here and test $6,000. We have no precedent for Bitcoin to go below $6,000. If that goes below $6,000, we'll see what happens from there. I don't think that's what's most likely, though. I really don't. We see this long-term descending triangle pattern coming over here. We've come this far in the long-term descending triangle pattern. If we were going to break below this long-term descending triangle pattern, break below $6,000, I don't see why it wouldn't have happened earlier, guys. I don't see why the market has waited this long. It would be surprising to me if we broke it at this point when, like I said, there have been much more bearish times where the sentiment in the market has been much more bearish, like over here in early July and late June and over here in August. I remember vividly how bearish everyone was. Everybody was extremely bearish, and when I was calling for rallies in those times, people were getting actually upset at me because I was calling for rallies. And I just don't see that anymore. Mostly what I see is that people don't really care anymore, and a lot of the emotion has kind of left the market. I don't see as many people in the comment section getting mad at me. I don't see as many people in the comment section getting emotional because they've, for example, lost money. I think a lot of the weak hands have left the market, and I also see a lot of new people coming into the market compared to what we saw a couple of months ago. I do think we're going to be breaking bullish out of this long-term descending triangle pattern as opposed to bearish, but I'm interested, as always, to hear your opinions in the comment section down below. Tell me in the comment section down below, which direction do you guys think we're going to be breaking out of this? Because that is really the most important thing. What I say doesn't really matter. What matters is what the community says, because if the community all agrees that we're going below $6,000 and they all trade in the and they all short down here to get us below $6,000, and they push us below $6,000. That's what really matters. I'm just one guy. I'm not a whale, but the thousands of you that are watching this video and the millions of people in the cryptocurrency space that are trading are the ones that are important. So tell me in the poll in the top right, do you think we're going to be going below $6,000, or do you think we're going to hold it? Do you think we're going to be breaking the long-term descending triangle pattern, or do you think we're going to hold it? I am interested to hear your opinions, as always, in the comment section down below, in the poll, and in the Discord server. If you're interested in joining the Discord server, definitely consider dropping a like for the Discord server. I don't know why I said that. Definitely consider joining the Discord server is what I was trying to say. Freudian slip, maybe. I just want you to like the video. Just a little bit of a subconscious. Anyway, that's basically going to do it for this video, guys. That was a weird outro. I do want to thank each and every single one of you for watching, as always, and I will see you guys in the next video. Peace.